Today's video is brought to you by SDBullion.com. Buy your gold and silver at SD Bullion right now. New customers can get gold or silver at spot by visiting SDBullion.com/new. All right. Hey, everybody. Smart Silver Stacker here. Welcome to another live stream. So I got called out by none other than Robert Kiyosaki himself. And I want to kind of cover this exchange. But first of all, let me just say, I've really got nothing but respect for Robert Kiyosaki. And the fact that he even tuned in to one of my recent live streams, somebody probably just sent it to him. I mean, I doubt he's a regular viewer, but the fact that he even found me, that's great. He's a best-selling author. He's got like more than 2 million followers on X, formerly Twitter. Who am I? I'm just some guy on YouTube. So anyway, with that said, let's just read this tweet here that Robert put out where he says, "Want to thank Smart Silver Stacker for laughing at me for recommending people buy and save silver since 2010. It's not easy being Paul Revere or Chicken Little, warning people the U.S. government is stealing our wealth via our money. Yet, laugh all you want, it's still not too late. Our banking system is bankrupt. Buy gold, silver, Bitcoin while you can. Then your friends and family will laugh at you in the same way Smart Silver Stacker laughs at me. Take care, by the way. If you can find me on Wolf Blitzer's program on CNN, I am on Wolf's program calling the crash of Lehman Brothers in 2008 before it crashed. Wolf laughed at that. In 2023, I'm on Neil Cavuto's show on Fox Business calling for the crash of banking giant Credit Suisse, which it did, and the possibility of UBS, United Bank of Switzerland, possibly crashing next. Laugh all you want into a global banking crisis. Please remember my warning in Rich Dad Poor Dad, published in 1997, predicting savers are losers and your home is not an asset, which came true in 2008. People are still laughing at those 1997 predictions. Watch for my next warning. The S&P is next, which will toast millions of 401ks and IRAs. Take care." Now, to give you some context for what we were talking about here, what Robert is referencing, I'm assuming it's got to be the live stream I did last night, which if you missed it, I'll play this bit of it here. And I think I have the volume turned up loud enough here that you'll be able to hear this in the desktop audio. But let me just play this bit here because it's very short. I thought to look this up because of Robert Kiyosaki. Now, I know, this guy's got kind of a checkered history of forecasts, is kind of a doom and gloom guy, but I think Robert overall has it right. Maybe his timing not so good, but he wrote just the other day, or actually today, FYI, bank credit just sold off like 2008. Get some cash. Okay. So that's pretty much the extent of what I said there. And I mean, to be fair, I did say that overall I think he has it right. But maybe it wasn't the most charitable way to characterize his forecast to say he has a checkered history. Now, also to be fair, I mean, he did call for the 2008 financial crisis, as he points out there, in the collapse of UBS. He's made a lot of forecasts over the years. Not all of them have come true. But I think probably, if anything, he's not guilty of being wrong on many of those forecasts. And I completely agree with his admonitions to get into hard assets. I think, if anything, he's just guilty of being perhaps a bit early. And also, Robert, if you're watching, I just want you to know I'm not really laughing at you. However, anytime I bring you up on the show, I get a lot of comments about, your timeline comments where you've picked specific times for events and things necessarily, they haven't come to pass. But I've always tried to treat you very fairly. And to give you an example of what I'm talking about, here's a tweet that Robert put out on July 26th. So this was leading up to the BRICS conference, and you can read the tweet. It's on the screen there. But basically, he said that the BRICS would launch a new BRIC currency, and one BRIC would equal 1 ounce of gold, and that would be the same as $3,000. Bye-bye USA, he says. And, that one also didn't come to pass. But again, just because it didn't happen at this BRICS meeting doesn't mean it's not going to happen. But here's a clip of a live stream that I commented on this forecast on, and I just want to play this for you to give you an example of the fact that I'm not really laughing at Robert. I think I've treated him pretty fairly in previous episodes of this show. So, that's pretty much my take on this. Is Robert Kiyosaki right? I mean, again, who knows? He's just speculating, I think. People like to kind of pile on when you speculate. I think it takes a lot of guts to make a call. And obviously, no one knows for sure, except maybe some folks in China or Russia. But time's going to tell. And I have a suspicion that even if this year we don't see BRICS commodity-backed currency, one very well may be on the way. And at the very least, I think we're going to see a nod in that direction and perhaps the foundation laid for such a thing. And okay. So anyway, this is the chart of bank credit that Robert was referring to in the original tweet from yesterday that I was commenting on in yesterday's live stream. And again, I pointed out in yesterday's live stream, he's 100% right about this, that we have bank credit contracting for really only the second time on this chart that goes back to the early 70s. So basically covers the entire time that the U.S. has been a purely fiat debt-based currency. And the only other time that it's really significantly dipped below this line, meaning a contraction of bank credit, was during the 2008-2009 financial crisis. So listen, Robert, maybe I laughed a little bit there. You do tend to put specific times on these forecasts. And of course, like I said in that other live stream I just played, that does take a lot of guts because you're guaranteed to make a lot of wrong calls if you're trying to time everything. And nobody can time everything to the minute. Anybody who could, you could always just go chain yourself to a trading desk and make bets with leverage, and you'd be a billionaire in no time. So I totally get it. And I didn't really mean any disrespect with yesterday's live stream. Saying you had a checkered history of forecast, probably, that's not really accurate, nor is it charitable. So I apologize for that. And anyway, overall, I really like Robert's work. I think his books have a lot of valuable information. I myself read Rich Dad, Poor Dad many years ago when I was a lot younger, and that was kind of an eye-opening book for me. I come from a family where we really, as a kid growing up, didn't discuss money a whole lot. It was really never on my radar. And then I read that book and it just really got my brain working. And also, I think his admonitions to get into gold and silver are entirely accurate. That's not what I was, chuckling at there. So anyway, that's all. It's just that, he has been calling for a massive financial crisis for close to a decade. It hasn't really manifested itself yet, but I think he's probably just early. And ultimately, he will be vindicated. I even see some people in the chat now saying even a broken clock is right twice a day. Well, listen, when you're preparing for a major financial crisis, sovereign debt crisis, the dollar losing its status as the world reserve currency, and you're stacking gold and silver to prepare, you want to be early rather than late. I mean, yeah, it's great if you can call it right on time. I don't know too many people who are capable of doing that repeatedly, but if you're going to pick early or late, you're better to pick early. So anyway, Robert, no hard feelings. I hope the same goes on your part. You probably won't watch this, but if you do, I think highly of you and your work. And anytime you'd like to come on the channel and have a conversation, consider this an open invite. Just hit me up on X. Anyway, let's take a look. In light of this chart here regarding contracting bank credit, which is a pretty ominous sign in an economy that is addicted to debt as ours is. And the last time this happened, it did coincide with a massive financial crisis, and it's very likely that this time may be the same story. Let's take a look at what's going on with interest rates today. We've got a trend now for the past several days. The 10-year yield has been climbing. And this is, once again, a sign of regional banks, the banking system in the U.S. Every time these rates go up, they have more unrealized losses on their portfolios of low-yielding U.S. treasuries. So this is something we want to pay attention to. And these rates may be going much higher in the very near future, barring Federal Reserve intervention. Just look at this story from today from MarketWatch. Treasury's $50 billion three-year auction goes badly, trader says. And according to this story, Monday's sale of three-year Treasury notes was met with low demand, with primary dealers taking a larger than normal portion of the sale to make up for a lack of enough indirect bidders. So the primary dealers, those are financial institutions which basically they're under an obligation to buy up treasuries that are left over that aren't picked up by regular buyers or indirect bidders. And so, what do you do when you can't sell treasuries, when the treasury auctions are going poorly? What do you have to do to entice buyers to come into the market? Well, the rates have to go up. The rate of return has to increase. And so you can probably expect yields on U.S. treasuries to continue to rise. And this is just another sign of the liquidity crisis, of the debt bubble, which is now coming under tremendous pressure. Our economy requires debt to continually expand, and that is going to be difficult to do in an environment of rising rates and tighter monetary policy. Of course, this is likely to result in the Federal Reserve coming into markets and buying up all those bonds to drive yields lower, take some pressure off these regional banks. I think that's what we're going to see in 2024. And look at gold. Gold coinciding with that rise in U.S. treasuries that we saw today, we saw gold coming down to 1980. And I view this as a significant buying opportunity. I mean, could gold drop lower? Yeah, possibly. As I mentioned in the past several podcasts or live streams, whatever you want to call these things, gold could dip down into the 1900s. It has now done that. I would expect this to be close to a bottom. I think there's going to be a lot of buying coming into market, especially from central banks around the world who have been accumulating this stuff. But more and more, as the cracks begin to show and the inevitability of Fed's return to debt monetization and lower rates, we are going to see this price moving much higher. I'm fairly confident of that. Could it go lower? Yeah, sure. Volatility is kind of baked into the cake at this point, and I don't view these price setting mechanisms as real free market price setting mechanisms anyway. Everything is dictated by the central bank, so anything can happen. But ultimately, I do believe we are going to see this price far exceed this high that we got last Sunday of $2,150. And silver will be, excuse me, a little tickle in my throat right behind. All right, let's look at this chart of the Federal Reserve balance sheet. And I just want to point out that, if we are on the verge of a major financial crisis, look what happened the last two times. Balance sheet expansion in 2008, lots of QE, same thing in 2020. There's no sign that this time is going to be any different. This will push gold up to new all-time highs, and it will debase the dollar to new all-time lows. So again, long-term, I think the call to get into hard assets here will be vindicated. And on that note, let's talk about another reason you want to hold some physical precious metals. Sorry, folks, I know I'm coughing. I've got a little bug here. I know people have said over the past couple of years, man, you get sick a lot. Well, look, anybody who has kids, I think, understands that they are just a disease vector. And so I'm doing my best over here, but little bit of a tickle in my throat today. So I'll try to get through this story, though, because this is an important one. China's, cyber army is invading critical U.S. services. Obviously, this should be alarming to anybody paying attention. This is a report from the Washington Post published today. The Chinese military is ramping up its ability to disrupt key American infrastructure, including power and water utilities, as well as communications and transportation systems, according to U.S. officials and industry security officials. Among the victims are a water utility in Hawaii, a major West Coast port, and at least one oil and gas pipeline. Hackers also attempted to break into the operator of Texas's power grid. Now, you might hear about this and think, well, why has nothing happened yet? Well, let's listen to what Brandon Wales, the executive director of the Department of Homeland Security, Cybersecurity and Infrastructure Security Agency, had to say about that. He says, it is very clear that Chinese attempts to compromise critical infrastructure are in part to pre-position themselves to be able to disrupt or destroy that critical infrastructure in the event of a conflict, to either prevent the United States from being able to project power into Asia or to cause societal chaos inside the United States to affect our decision-making around a crisis. That is a significant change from Chinese cyber activity from 7 to 10 years ago that was focused primarily on political and economic espionage. The hackers are looking for a way to get in and stay without being detected. Excuse me. You're trying to build tunnels into your enemy's infrastructure that you can later use to attack. Until then, you lie in wait, carry out reconnaissance, figure out if you can move into industrial control systems or more critical companies or targets upstream. And one day, if you get the order from on high, you switch from reconnaissance to attack. So that's from Joel McReynolds, a China Security Studies fellow at the Jamestown Foundation, a think tank focused on security issues. So if they're penetrating critical systems here, but nothing has happened yet, what could trigger that? Well, probably a major conflict, which again, we continue to be escalating towards a major global conflict here. We have many fronts. We've got the Middle East right now, which is seeing significant escalations. You've still got the problems in Ukraine. You've got South America now with the potential for annexation of parts of Guyana by Venezuela. And the assessment here said if Beijing feared that a major conflict with the United States were imminent, it almost certainly would consider undertaking aggressive cyber operations against U.S. homeland critical infrastructure and military assets worldwide. So, this is to me a sign that, one, you just need to be as independent of systems of support as you possibly can. You want to have backups for any kind of critical infrastructure that you rely on to the extent that you can, but also from a financial standpoint, having some physical assets outside of the digital financial system, I think, would be wise here. You cannot hack physical gold and silver. Of course, you could have some cash as well, but if the whole system goes down, if there are disruptions, even if they're only temporary, how much purchasing power is cash going to have? I think that is up for debate. But gold and silver, they've been money for thousands of years. So I think it's probably wise when you look at this to have some in your possession. Of course, not financial advice, not telling you what to do, just my interpretation of these stories. But that's pretty much it. Hope you enjoyed this live stream. Again, Robert Kiyosaki, look, you want to come on the show, you want to talk about gold and silver, I'm sure myself and my audience could learn a lot from you. You've been investing in precious metals longer than I've been alive. So again, hopefully no hard feelings there. And I think that the call to get into precious metals will be vindicated as we move forward. Is it going to be tomorrow? Is it going to be next year? I mean, it's impossible to time these things. But as I said earlier, when you can see that something is obvious, when a bubble is forming, whether it be in the US dollar or in the massive levels of debt here and around the world, you don't know when it's going to pop, but it can become obvious that it will pop. I mean, can a bubble always get bigger? Sure. Can the can always get kicked down the road? Well, until it can't. So I'm glad to be preparing now. I think it is wise to get into hard assets. Let me know what you think in the comments down below. This exchange kind of went on Twitter. I don't really have much of a following, or rather X. I guess it's X now. So I don't have a huge following there. Anybody who has X or Twitter, go check me out at Stack Smarter and give me a follow. And I'm trying to get more active on there. So let's go ahead and build that community up as well. But I just want to say a big thank you to everybody who tuned in. Smash that like button, share the video. Make sure you subscribe if you haven't done that. And I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker.